You want it? We have it. The hottest mortgage and real estate strategy broadcast in the nation. A Smarter Way Home with your host, Danielle Boote and Victor Bals. 50 years combined experience, ranked in the top 1% in the nation for home loan originations 2020. Promise to expand your knowledge, utilizing creative mortgage financing and home buying strategies. Build a bridge for a better quality of life. Get your brain cells firing for a smarter way home. And welcome, everybody, to another episode of A Smarter Way Home. It is our first show of the new year, 2022. My name is Victor Bals, loan officer, and I am here with my wonderful co-host, the loan officer extraordinaire, Mrs. Danielle Boote. Good morning to you.
Good morning, Victor. How are you?
Pretty good. It's a new year.
It is.
And we got a lot of stuff happening in the real estate market out there.
It's going to be an interesting start to the year.
Interest rates are going to be going up.
They are. This week has been kind of volatile.
Yeah, it's actually, speaking of this week, I actually had a pretty bad week here, and I want to just kind of bring a little public service announcement. Yesterday, as you know, my father had died, and I was in the hospital for about 15 hours at his bedside there. And when he passed, the doctor come in, and my father's wish was always to donate his body to science. And so when they come in and the doctors came in, they say, okay, what are we going to do? I go, well, my father always wanted to donate his body to science, and I'm the medical power of attorney. And they said, oh, okay, well, do you have all the paperwork for that? And I go, what do you mean? What paperwork? And I don't know anything about donating bodies to science. And they said, oh, you have to get the body accepted. And there's a bunch of forms you need to fill out. And so they tried to get some information for me. But then one of the nurses came in and she says, hey, I know someone who donated their parents' body to the Wayne State University Medical Department for research and all that. I go, So I Google that there, and I call up the number there, and I get this gal, Barbara, on the phone, and we started talking, and it was actually a pretty easy process, and they went through about 15 questions to make sure that my father actually qualified, and he died of Alzheimer's and dementia, and actually had pneumonia, and he had a brain tumor about the size of a golf ball in his head, pushing on his brain there. And they asked some other questions of his ancestry and all that, and they said, oh, he would be a perfect candidate for donation, and his body will really help our students and our research department because, of course, we want to find a cure for Alzheimer's and dementia and all that stuff. So, and I go, okay, so what happens and how much does this cost? And they said, well, Mr. Bales, this cost nothing to do that. And I go, really? You're kidding me? And they go, no, you're donating the body. And I go, oh, wow, okay, that's cool. So what's the process? They go, we're going to email you a form, and we have to have, there's 3 siblings, they have to have at least 2 siblings sign a release form stating that we are donating the body to science. And so my sister and I had done that. And now today, within 24 hours, they actually come and pick up the body, take it down to the research. And now what will happen is they will keep the body for up to 2 years. It could be a week. It could be 2 years that they'll keep the body to do research in classes or do whatever they do.
Oh, wow.
And after they're done with the body, they give me a call, and what they do is they cremate the body, and they can dispose of the ashes. I can come pick up the ashes, or they will mail the ashes in an urn for $75. And they take care of everything. So I was able to get my father's wish. He's always talked about donating his body to science, and it's just a great public service. So I just thought I would bring that up today.
I had never, I'd heard of that, but I guess I never looked into it. So that is an amazing story, but gives you a little bit of hope at the end of your dad's life.
He may be able to help other
maybe
people.
he could help other people.
Yeah, so.
And he, our condolences to you and your family.
Oh, well, thank you.
We know how much he suffered the last couple of years. So as hard as it is to say goodbye.
Yeah. And it was funny because I was planning for plan B. Okay, we got to cremate him. That was the second option. But now his body's going to help other people. And maybe they don't have to go through what we did, But anyway, let's get on with the show here, Danielle. And today we're talking about, what are we talking about here?
We are going to talk about down payment funds for purchasing a house. This is one of the biggest topics, particularly for first-time home buyers. In some cases, for move up buyers. So we'll talk a little bit about that. I'm going to share a story about my daughter's recent home purchase as well, and how we got her in a great position when she had to sell a house, in addition to trying to buy a house in this competitive market. But, one of the biggest things that people ask us is, okay, I need funds for closing. Where does that money come from? And what is acceptable documentation for a lender? Mm-hmm. So one of the biggest things is that we cannot accept undocumented cash. Mattress money doesn't work. Poker money in a coffee can in the corner does not work.
Lottery winnings.
Lottery winnings we could potentially paper trail. Mm-hmm. The biggest thing for lenders is that we have to see the money in an account seasoned for 60 days.
So that money, if I did have mattress money, or I hit the casino, or something that's untraceable where a buddy owed me some money, mm-hmm. that money has to be deposited into an account and sit there for 60 days, because the underwriters will do what? They will go back?
They will go back 60 days. So it's honestly more than 60 days.
Yeah.
Because we need 60 days worth of bank statements. So if you deposited money in, let's say, December, okay, if we see the large deposit back in December's bank statement, we're going to have to ask about it. We're going to have to source the funds. If you deposit something in December and you come to us in March, we're not going to see December, okay? And if you come to us in March, we're going to ask for January and February's bank statements.
So is it good to say that anybody who is looking to buy a home mm-hmm. this spring in 2022, and you have mattress money, you've got money in the safe, a buddy owes you some cash, get it in, get it deposited now?
Yes.
Okay. That's,
we need to be able to source it. And we're going to talk today a little bit about sources, where you can get down payment money, how to source it properly so that you're prepared. Now, it's January in Michigan. It's 20 degrees outside this morning. It is cold. There's not a lot of listings on the market. But this is typical for Michigan. In a typical Michigan purchase market, we are relatively slow in January and February, not always. But as we get into this year, we will see more listings come on the market and buyers preparing for the spring market.
Well, as you talk about buyers preparing, because here over the Christmas holidays, I'm thinking, oh my God, I'm in sales. The phones ain't ringing. I'm a loser. I'm never going to make it in life, And then come January 1st, boom. Here come all these phone calls, because we have all these potential buyers that have listened to our podcast, have listened to our advice, listened to their real estate agent that says get pre-approved early, mm-hmm. and those phones are starting to ring.
They are. I had a call on Sunday, December 26th. Sunday, the day after Christmas, I had active phone calls from buyers that were looking to get pre-approved already, which was like, okay, great. They want to get ready to go. And the buyers that are thinking about it right now, they have leases up on their apartments and things March, April, and May. That's how far in advance they're planning to get prepared.
So the spring buying system, the spring buying season starts for a borrower now.
Right now.
Absolutely now. So you're prepared in March or April, and we've got the plan together, everything documented, and we have a good strategy.
Right. So one of the tips that I would have for anybody wanting to buy a house this year would be file your tax return as soon as you can.
Oh, okay. So now this segues into what we were talking about for down payment. So let's elaborate on the tax return.
Well, there's a couple of reasons that you want to file your tax return. 2020, for a lot of borrowers, had income interruptions because of COVID. Many people were off work for short periods of time. Some people were long periods of time. Self-employed borrowers had income interruptions.
Oh, yeah. And so self-employed and people in the service industry.
Correct.
Bartenders, waitresses, anybody on commissions.
Right. Overtime. So for 2021, most consumers did better financially. Okay, their income was more solid. They should not have had shutdown periods of time, and their 2021 W-2 is going to look stronger than
Or their
2020.
1099s or just
Correct.
total tax returns.
Everything all around, and the minute you file that 2021 tax return, all of that income can be used to qualify for you for a new mortgage. So that's number one. The number two part of filing your tax returns are the potential refunds that borrowers or consumers will receive. We can use your tax refund as cash to close on your new home. We document that through your filed tax return and then the automatic deposit from the IRS. So we can pre-approve you with IRS tax refund as source of funds to close. As soon as you file your tax return and we know what that refund's going to be, we can pre-approve you based on you're getting $3,000, you're getting $5,000, whatever that amount is. And then usually when you file your return, that deposit is going to be in your bank account a few weeks after you electronically file. So those that file early will likely get returns in February, which we can use for funds to close.
Okay, so question. A consumer may say, okay, I filed my tax return, but do I have to wait for my money to hit my account before I can put it in an offer?
No, you do not have to wait. We will use that proof that you have filed electronically, knowing that the funds will be deposited prior to closing. So for instance, the IRS, I believe, is going to open up electronic filing on January 15th. If you are ready to go, whether it's TurboTax, a local CPA or tax preparer, you get that filed early, you're going to be in the first batch of returns out there. So we know that by the time you find the house, have an accepted offer, and are ready to close within 30 days, that refund will be there.
Okay. Question. Okay, Sally Joe goes to H&R Block. She's going to get $6,000 back on her tax returns. And H&R Block has that where they cut you a check. Technically, they're giving you a loan for your future tax return, and they're going to take the tax return. Are we allowed to use that money?
As long as we can document it, I believe we can.
Okay.
Because we know that it's just an advance. But in most cases, I think I've had people do that over the years, but it's not necessary in most cases because you're going to have that refund in 2 to 4 weeks max. I mean, I know last year the IRS had a little bit of a late start. I don't think they opened up the IRS portal for electronic returns until late January, but because of COVID. But they do appear to be on target to open up on January 15th. So as soon as that happens, it should be, I think, a little bit smoother than it was last year.
Excellent. So as we talk about tax returns, many of our first-time home buyers have parents that want to help. So they can actually use mom and dad's potential tax refund for gift funds as well.
Yeah, so gift funds from a bona fide family member.
And what is a bona fide family member, Danielle?
Well, it could be a mother, father, brother, sister, cousin, grandparent,
Blood.
sibling. Well, technically, it doesn't have to be blood.
Okay.
You could have a step sibling that would qualify. So a family relationship or a significant other that can be documented. So it could be a fiance, a significant other that you have, cohabitated with for a period of time, somebody that we can show there's a relationship there.
Okay, so I'm going to buy a house and I've got Uncle Billy is going to gift me money. Should I move money now, Danielle? What's the process for gifting money? What should I do?
Well, it can happen one of two ways. First of all, anytime you get a gift, you want to make sure that you can paper trail the funds. Okay?
Paper trail. What do you mean by a paper trail?
We have to see the money coming from the gifter to you via some kind of documentation. A copy of a check would work that Uncle Billy wrote to Sally Joe. Okay, that would work. An electronic transfer could be documented between bank accounts. There's certainly a lot of electronic options these days between Venmo, PayPal, things of that nature. If we can prove that Uncle Billy gave Sally Joe the gift and we can show that it came from Uncle Billy's account, that can be used. Now, the gift can be handled a couple of different ways. Many times a family member will give the gift to the home buyer prior to them initiating the home process,
Okay.
which is acceptable. But please keep copies of anything.
Keep copies
Okay.
in there.
Now, depending on when you find a house, if you don't find a house for 90 days, we might not have to document it as a gift.
And this goes back to any cash coming from somewhere. And if I show
Right.
that gift in there for at least 60 days, or it's not on the last 2 bank statements,
We're not going to
there's
question.
no questions.
There's no question. So it may
Okay.
not be a gift a couple months in the future. If the gift is given, for instance, right before, let's say they find a house and Uncle Billy's given the gift, that's fine. They can use it for the earnest money deposit. They can use it for inspection appraisal fees. We'll just then document it as a gift. What happens during the mortgage process is we will ask for your family member's name, phone number, and address. We will prepare a basic gift letter, provide it to the borrower, have it signed by the borrower and the family member giving the gift. And in some cases, we need the family member's bank statement to show that they did provide the money from this account.
Okay, because we've had this many times before where Uncle Billy wants to give the gift, but he doesn't want to give any of his personal information, and he'll send us that bank statement, and he blacked out the account number, his name, and address. How does that work, Danielle?
Well, unfortunately, we cannot accept any altered documents for the mortgage process, including from a gift donor. So blacking out a statement is going to void everything. The family member does need to cooperate and provide the bank statement. Many times family members are reluctant to give up that personal information. And what I do in those situations is try to have a conversation with Uncle Billy or mom and dad and say, look, the documentation we are collecting does not have to be shared with the borrower, okay? It's going to be in the file. It doesn't go any further than that. We don't report anything to the IRS, for instance. We're not going to share it with anybody else other than the underwriter for the purpose of approving the loan. And usually that calms them down a little bit. You know, sometimes if they don't want to send something electronically, you know, they'll stop by the office, give us the bank statement securely, or we can send them a portal that they can send us the documentation securely. But most of the time, it's not a problem once we explain what we're doing with it.
So I get this phone call a lot that, let's say, Uncle Billy or let's say mom and dad say, I'm going to gift my kid $20,000, but, you know, I'm going to be up for taxation and all that stuff. That really doesn't occur because we don't report anything to the IRS.
Well, there are IRS rules when it comes to gifting money to a family member. So technically, and off the top of my head, because I didn't look this up, there is a limit per person in the family.
$12,500.
I think it's higher.
sibling.
I think it's higher now.
Could be. Yep.
So it's per family member. So let's say, and first of all, here's what I would tell everybody: that mom and dad need to call their CPA. If they have questions on how giving a gift is going to impact them financially, first they need to call their CPA. But I do know that they can give the gift to each family member. So if you have a couple, they can give a gift to a husband and the wife or the significant other, okay? And if there's children in the household, they can also give gift to the children. So from conversations that I have had with CPAs over the year, even if they give a larger gift, you have to look at the total people in the household and then allocate that gift. You know, if there's 5 people in the household and it's $16,000 a year for the gift limit, untaxable gift limit, it's 16 times 5. But that is a CPA question.
Yep.
So,
but that's a great way to get money is gift funds and tax returns. What other ways can an individual obtain money for down payment?
another great option is a withdrawal or a loan from a 401k account.
Okay.
So if a borrower has a retirement account, the IRS does allow a penalty-free withdrawal from their 401k, meaning you can withdraw money and not pay a 10% penalty if you do what we call a hard withdrawal. You're taking the money out and you're not putting it back in, as long as it is for the purpose of purchasing a home or you can take a loan against your 401k. The federal guidelines is that you can borrow up to $50,000 of up to 50% of your 401k balance. So if you have $100,000 in your 401k, you could borrow up to $50,000. Now,
if your plan allows that type of, like 403Bs do not allow.
Yeah, correct. So if you work here as an example in our market, University of Michigan employees, because U of M is a nonprofit organization, whether you work for the university or the hospital, they do not have a 401k, they have a 403B. So you cannot withdraw from a 403B, though sometimes there are different savings plans, and this is where you check with your employer. Even there are some U of M employees, for instance, that have a 403B and then they have another type of savings plan attached with their retirement vehicle that sometimes they can access. Okay. So, yeah, those would be questions for your employer, for your 401k plan advisor, and that can be an option. And I don't recommend that somebody withdraw $50,000 necessarily. Right. I would say do the minimum. And when we look at the math, and this is where we dive into what a borrower's needs are, let's figure out what your best program is, what your minimum down payment is, and closing cost. And then we can look at all of your financial situation and advise you what are your options and how do you come up with funds to close.
And when I talk to a client, and I always tell clients, let's get the cards on the table. Mm-hmm. Make these phone calls. Do not execute any move from a 401k, but call them up. Understand, can you take a withdraw for a purchase? Right. Can you take a loan? If so, what's the max you could take and what are the terms? Mm-hmm. Report that information back to us so we can use that as a card on the table when we structure your loan, figure your cash to close, your payment, and not leave your house broke, and make sure that we still have some money left over for emergency funds and such.
Exactly. So if people really need to look at the big picture, and say, okay, how badly do you want a house right now and what can you come up with?
Yeah. And I always get the question, well, that's for retirement. And I say, you're absolutely right. That's for retirement. But if you just keep putting away for retirement all your life, you may not get to enjoy it. There's about putting away for retirement, and that 401k is for retirement or a change of life, right? Mm-hmm. There's a thing called a quality of life. As long as you're not going out and using the money for lottery tickets, and you're using this to better your lifestyle.
Right. Well, your home will be an asset.
Absolutely.
Which will, again, if your goal is, if this is your first house, it's really hard to imagine what your life is going to be like in 25 or 30 years. But if you purchase a house and it's paid in full or close to paid in full by the time you retire, then you've got equity. We're seeing this. There's right now with the baby boomer population, there are a lot of baby boomers that are looking to maybe downsize. They're going from a home down to a condo, and guess what? Their homes are free and clear.
Yep.
They can use their current equity probably to purchase cash, maybe get a small mortgage if their financial advisor recommends it for their long-term retirement and savings goals. But that's the goal. So the house is also an asset, just like your 401k is. And if you look at real estate, it's a very solid vehicle for investments.
It's funny because, I've been doing this over 20 years now, and I remember doing some of those mortgages for those people with 401k loans to get in with the minimum down.
Right.
Now they're downsizing. The house is paid for free and clear, and they would have never had a house free and clear or had the opportunity for all that appreciation if they didn't utilize a gift fund or a 401k
Exactly.
loan.
So that, Victor, leads into let's talk about the next possible bullet point. Uh-huh. We have a lot of buyers right now and young buyers that maybe bought in the last 3 to 6 years, 3 to 8 years, that are now ready to buy their second home and have a considerable amount of equity in their existing home.
Okay.
One of the challenges that we run into in this market is that sellers are reluctant to accept an offer contingent upon the sale of someone's current home.
So that seller doesn't want to sell me that house because I have a house to sell. And there's many other offers that they don't have a home to sell.
Correct.
Okay?
Why would they wait? Because most homes sell very quickly, but that's not always the case. And why, if a seller has got multiple offers, they're not going to look at one contingent upon the sale of a home. Even if, think about this. Let's say you have somebody that is of retirement age, their current home is free and clear. Okay? And they can pay cash for their new home. Why would a seller wait?
Right.
Okay? You don't have liquid assets. You can't pay cash for a home. You can't write a cash offer unless you have the cash.
Right.
Which means you either list your home, get it under contract and hope you can find the home that you want, or do we look at things creatively? There are, for an existing homeowner. And I had mentioned that my daughter and her husband just bought a house actually this week. And they were in that exact situation. They had a significant amount of equity in their home. They were actually able to qualify with 2 house payments.
You mean their current home and the house payment they're going to buy, they qualified and got approved for both those payments?
Correct.
Okay.
So we wrote an offer not contingent on the sale of their home. Mom and dad gave them a gift.
And that
for
mom and dad, that would be you.
Yeah. that we gave them, we were able to assist them with a gift for their down payment and closing cost. As soon as they got into contract on their new home and passed inspections, their house went on the market. It was under contract in 3 days, and their current home will close in 2 weeks.
Okay.
So they will not even have a duplicate house payment. It didn't impact financially at all. They'll sell their old home before they even move in to the new home. So it worked out very smoothly.
And that took off and that's what got them the offer accepted,
Right.
because
They were in multiple bid situation, even writing an offer in early December.
so they could qualify for both payments. They just didn't have the cash, and they utilized one of these gift fund strategies that
Right.
we were discussing.
Now, another strategy for someone that has a home to sell and needs the asset is they could get a home equity line of credit or a bridge type loan, meaning they have a way to access the equity in their current home before they go out and buy. And that's a great strategy, especially for homeowners that might have a home that's free and clear. If they're of that retirement age, for instance, I had a woman call me recently. Her current home is worth about $400,000. She is getting ready to list it this spring, and she wants to buy a condo for about $300,000. So she doesn't need a mortgage.
Right.
Okay. But what I advised her to do is to either get a home equity line on her current home or a bridge loan. Then she can essentially write a cash offer on her new buy and then get her house on the market. And as soon as it's sold, whatever she borrowed is paid off, and with very little fees incurred and potentially little or no payments along the way on that borrowed money. But even for younger people that maybe bought in the last 3 to 5 years, that could also be a strategy for them. Maybe they don't have parents that could give them a gift. My daughter and son-in-law could have gotten a home equity line of credit as well that would have allowed them to structure their new home purchase. Now, will that work for everybody? Nope. Not everybody's going to be comfortable moving forward. But you know what? We had a great realtor and who we knew, but obviously I understand the market. We had a great realtor that understood the market, and we were able to negotiate both transactions very, very smoothly to the benefit of the buyer and the seller on all sides.
Speaking about utilizing the home equity lines of credit for money to buy a home and then sell your current home, you need to be upfront with the bank that you're doing these home equity lines with, because some of these banks do not allow to take an equity line knowing that you have the intention of selling the home.
Right.
However, there are several banks out there that will allow it. In the general provisions of these home equity lines is there's zero cost upfront, okay? But if you were to open up a credit line and then you buy the new house, Generally, you'll pay interest-only payments on the outstanding principal or the amount that you tap. But if you close it within 1 year to 3 years, there's a 1% or about a $400 fee, whichever is less to close it out. So
Right.
in the long run, if it costs you $400 to get the $15,000 to
cheap.
move on to the
Yeah.
next chapter, it's well worth it. But be upfront with your lender and your intention to make sure we have a green light.
And the other thing with a home equity line is that they take a little while to close. Most lenders, I would say right now, are between 3 and 5 weeks to get it done. So here's the problem with this strategy. You can't do this on a whim. Okay. You cannot write a cash offer and then figure you're going to get a home equity line of credit in 3 to 5 weeks. That's not realistic. So really what you need, again, if you're thinking about buying this year and potentially have a house to sell, you need to think about this well in advance. You need to be taking care of all of this now, even if you're planning on moving May, June, July, August.
Yep.
Come up with plan A, come up with plan B, and then you're really prepared. And that's how you're going to win in a competitive market.
Set the stage.
Yeah.
Because thinking about this, after you get an accepted offer, your emotions are on a whole different planet anyway.
Yes.
And when we got to come back and think of the strategy to get you the best situation, it could be too late.
Yes.
Absolutely. But home equity lines are a great source. And I've had plenty of clients, as we look at their credit, I said, we could get a home equity line. They said, where can I get one of those? And I look on your credit and say, you have one.
Yeah.
On your property right now, you haven't touched it in 3 years. They go, I forgot
all
about that.
It. Yes. Yeah. Honestly, for a homeowner that has equity in their home, a home equity line of credit used properly and cautiously is a great financial tool.
Yeah.
I typically have had one open for years. Now, the goal would be to have a zero balance on it, right? But if something comes up, you can access money very inexpensively, whether it's for investment, purchasing another property, giving a gift to a family member. Parents could use their home equity loan to give a gift to their kids short term or something of that nature.
Yeah, I always advise any client post-closing, for the long strategy, especially if you had a substantial down payment, is go open up a home equity line of credit just for an emergency account so you don't have to take a withdrawal and pay a penalty on a 401k. What happens if you lose your job? You have an income cut. There's a change in life. The furnace goes out. The car goes out.
Any kind of health emergency.
Yeah.
You can't get a home equity line quickly and easily. If you've lost your job, nobody's going to lend you money.
Right. Right.
So you want to have a solid financial plan on how to take care of things.
And that home equity line could pay the expenses. That money buys you time so you don't make, let's say, unwise decisions financially. Yes. Yeah. I'm not going to settle for that job here. I'm going to wait this out and get the job I want.
Right.
Right. So, okay, excellent. Let's go into this. Did we already discuss the story with your daughter here?
Yeah, we did.
Okay.
Yeah, we just chatted about that.
And another thing we brought up was down payment assistance there. Mm-hmm. What are these programs, Danielle? How can they help? And are they as good as they sound?
Well, in Michigan, one of the most popular down payment assistance we have is called MSHDA. MSHDA stands for the Michigan State Housing Development Authority. And MSHDA is a program that is backed by federal grant money that Michigan will give out to qualified borrowers, where they will give up to, right now available in the state, the minimum is $7,500 up to $10,000 for select areas.
Select zip codes.
Towards down payment and closing cost assistance.
So this isn't a gift.
No.
Okay.
It is basically a loan against the future equity on your property. So if you qualified for MSHDA and MSHDA gave you $10,000, they actually put a lien on the property behind your first mortgage.
So it becomes part of the payoff if I was to sell the home.
Yes. There's no payments on it. There's no interest on it. But when you sell the home in the future, anytime in the future, you will have to repay that money.
Okay.
So you're basically borrowing extra money on your house against the future equity. Now, we don't see this program very frequently at all in Livingston County because we're fortunate to have rural development zero down. But MSHDA can be a great option for areas where the borrowers don't have any other options. The only thing with MSHDA is that the interest rate is set by the state.
And that's typically higher than current market rates. Is that?
It can be. So in the last year and a half, it has been higher than market rate because of all of the reasons that the other mortgage rates were low. Right now, with rates going up a bit, MSHDA is going to become a little bit more competitive. The rate for the last maybe year and a half has been about 3.875.
Yeah, and they don't really, they change like once or twice a year. They
Maybe.
don't change every day
Correct.
like our world is.
Correct. So MSHDA could be a great option. Wayne County, we see a lot of MSHDA in. And that money can go towards your down payment, closing cost. We still qualify you for the mortgage. That can be an option. I had one borrower recently that worked for AAA of Michigan, the big insurance company, and they had a special program for. This was not for all AAA employees. I'm not going to go into the details specifically, but they had a grant program. So some employers...
Now, grants that's free money.
So she was given X amount of dollars towards the purchase of her home. She just had to prove, here's my purchase agreement, here's my mortgage numbers, I'm getting a mortgage, and they gave her money towards her down payment and closing costs. So some employers could give a gift. That
along with the MSHDA
grant.
down payment assistance.
Yep, you can actually use both together.
So now, but with the MSHDA, I believe the guideline still states that the borrower must come with 1%
Correct.
of the entire purchase price.
Right.
You got to have
Minimum.
some skin in the game.
Yes. Yeah. So there are other down payment assistant programs out there. I know that there are some special programs in Wayne County, in Oakland County. Those are typically income-based, driven borrowers. Sometimes they are based on certain zip codes, meaning they're trying to get people into, maybe the more city areas that, don't sell quite as hot as other areas.
Well, let's just talk about just a couple. You said income limits. Oh, there's income limits? What does this mean? How do they calculate income?
Well, they look at the average median income for the state and the county, and then they come up with, okay, we're going to target this program. For instance, rural development also has income limits. They're more generous than some of the other programs. MSHDA does have income limits, and it's based on the county that you're purchasing the home in.
And that's just not you, the borrower. That is all household.
All household members.
So
correct.
every member in the household, even if grandma's getting Social Security, they're going to count that towards these household limits.
Correct.
Okay.
Correct.
And
So there's a lot of down payment assistance programs that could be available, and that would be a specific conversation.
What about price limits? Are there price limits on these MSHDAs?
On MSHDA, there is. Currently, it's $224,250, and it's been that purchase price limit for a very long time.
In what area does that cover?
The state.
That's the state. Okay, so in Livingston County, how many $226,000 homes are out there?
Not many. Yeah. So that's another reason why we don't use it heavily in Livingston County. But, if you, I have a client right now. In fact, I gave out an updated pre-approval letter yesterday to a borrower that I have pre-approved. They're going to do conventional, the 3% down option with the MSHDA grant. So, and they're about $150,000. So it's they're first-time home buyers. They do have a little bit of money saved. But it's going to be a win-win situation for them once we get them into contract.
So this MSHDA down payment assistance program is not just for conventional. You can use this on conventional, rural development,
VA, FHA. All loan programs are available for MSHDA.
So it's a subsidy, or it's a second lien on those properties, and it's here to help home ownership in specific areas. But there is some limits on prices depending on the area. Give us a call, and we can go down that rabbit hole to figure out all the little check marks to make sure you're in it.
Exactly. Now here, let's move on to another option.
What do you got?
Good old-fashioned savings.
Savings.
Okay.
What's that, Danielle?
Well,
I don't even think that's in my kids' vocabulary.
Okay.
Save.
It might not be.
Actually, it is. It's pretty good. Man.
It is hard when you're young. Okay.
Hard?
I'm not going to say that it's easy. But one of the things that I tell borrowers all day long is, look, if you are really focused on buying a home, you need to sharpen your pencil, create a monthly budget, and figure out where you can save money. Now, here's what I will tell you through all of my years' experience and looking at people's bank statements. We live and die as Americans by our debit card that is attached to our main checking account. And we overspend. You know what the biggest thing is I think people spend money on?
Coffee.
Coffee or food. Okay.
Yeah.
When the fast food industry started taking debit cards, remember that? I mean, it's been only in the last maybe 10 years.
Yep.
They doubled their order size. So instead of, when we were kids, right, we literally had change in the cup, and you went to McDonald's and bought whatever you could with the dollar money. Or my brothers and I used to return pop bottles for gas money. Yeah. Now, granted, gas was cheaper back in that day because we're not young anymore. But that is what you did, okay? What we have seen over the last 7 to 10 years is increased debit card usage, and no one looks at their bank statements. I don't care how old you are. I don't care how much money you make. I challenge you to print your bank statement, the good old-fashioned bank statement. Nobody does it. Everybody looks on the app. But, when you look at your bank on the app, you're only going to see your day or two of activities. I challenge you to look at the entire statement. And why don't you highlight food, groceries, other gas, right? Figure out how much you're spending. And I would challenge anyone to put your debit card away for 60 days. Budget yourself cash. And when you go and get lunch out or something or a coffee, spend cash. Yeah. Don't swipe the card. You will not swipe. You'll start thinking twice about a $5 coffee. And honestly, you could save, I've seen people save hundreds of dollars a month just by minding. If you mind the pennies, the dollars will follow.
They take care of themselves. Yeah, so if they spent $25 a month on coffees and debit card drive-thrus or whatever the hell they're doing there, that actually buys them about $5,000 in mortgage. And people don't realize that.
No, I mean, I have seen, I actually had somebody apply for a mortgage a couple years ago, and this one was painful, okay? I had looked at the borrower's credit, and I had looked at the income, but we didn't have a bank statement. But she said, I got this much money. Okay, great. So I get her bank statements in, and she had in excess of $300 a month in overdraft fees.
Wow.
So basically what this person was doing was...
Just in overdraft fees, that buys them $60,000 in mortgage.
Every month. So when we look at your bank statement, not only can we see your month to date non-sufficient funds penalties, we can also see the year to date. Now, if you have an NSF once or twice a year, anybody can make a mistake. Even myself, it will screw something up occasionally, right? But if we see it excessively again and again and again, that looks like financial mismanagement. The other issue is how much money you're wasting. So in addition to excessive fees that you could pay your bank because you're not managing your accounts well, I have also seen people, for instance, swipe a $5 coffee at the coffee shop, overdraft their account, and pay a $35 fee. So effectively paying $40 for a cup of coffee.
Wow. And also I was on my way to somewhere yesterday morning, a gas station, getting coffee, matter of fact. And I heard a report on the radio there. They saying that the millennials, or what's the generation after the millennials? Is that
Z? Gen Z.
Generation Z, that they spend an average of $27.50 a month on debit card fees just for using the debit card.
Could be.
That 27, that buys you $6,000 in mortgage, just that fee alone every month.
Right. So there's just a lot of ways to save. So pay, and then here's the other thing. Buyers will sometimes say, well, I'm paying $1,200 a month in rent. I can't afford more of a house than that. Well, again, I'm going to challenge you to say, first of all, let's qualify you for the mortgage. We will tell you what a comfortable range for you will be in and in our area, we can keep a lot of first-time home borrowers in a comfortable range where they're paying for rent. But if you're paying $1,100, you might be able to afford 12 or 1300. But again, look at your budget. There are so many cool apps out there and tools that any consumer can use to help budget, or look at your bank statement. And again, you know what? And I'm not sitting here preaching because I know better. Okay. I am speaking from life experience.
Oh, yeah.
Jim and I have had a few points in our lifetime and our marriage where we have struggled financially. And honestly, one of the ways that I had to dig out of our hole, and this was during the last recession, it hurt us very significantly, was I did take our debit cards, both of them. Because you look at a couple and you go, you have 2 debit cards. So if you're each swiping once a day, twice a day, or even a couple times a week, and you're not keeping track of it, how do you know what you're spending? The same thing with credit cards. I have had times where I go, nope, we're done with credit cards. You know, we were in a bad place years ago, and it took some serious reckoning with our habits to say what we're doing isn't working here. We've got to tighten up the ship and but these automatic tools are just very dangerous.
Sure. So what you did is you took a reality check, and then you just took some very simple financial disciplines and applied them, pulled yourself out of the hole, and now look at you.
Yes.
You know?
Yeah, but I give this advice to a lot of people. So there's nothing wrong with savings. One of the other things that I will encourage borrowers to do is set up a separate account. I personally love to budget off of multiple accounts. Now, I'm a big credit union fan. I've banked with a credit union pretty much my entire life, and I have, in some cases, I have my main checking account, and I'll have multiple savings accounts. So for a first-time home buyer, I would tell you, put a special savings account together and say, this is what we want to save for the house. Yep. And then if you have an extra $100, put it in there. Yeah. If you get a gift, I've had people say, my family member gave me a gift for my birthday, or wedding gifts. All of those things
pop it into the
can
house
go for your house. Put it in a savings account. And, then there's, again, the nice thing about a savings account, don't get an ATM card attached to it, so that you're less likely to touch it. And even today, I budget that way for multiple reasons,
It's funny you say that. And for those of you who have payroll deduction, auto deposit, set up a brand new account, and then set it up $100, $150, $300 a month, and it just automatically goes in there. Set it and forget it.
Yes. Yep.
Another strategy that my wife and I used here is, I remember years ago, she's much better at budgeting money than I am. And I've learned through the years. And I remember we were going to Costco, and I said, hey man, I want that television, and she goes, why do you need a 70-inch television? This is when they first came out a long time ago.
They were really expensive.
Yeah. And she goes, and I think it was like $4,000 back then, when they first came out.
Crazy expensive.
And she goes, are you crazy? And I said, no, I want it. And she goes, why? I go, it's on sale. She goes, I tell you what, man, you can go get anything you want. She goes, I'll match you dollar for dollar. So you save $2,000, I'll save $2,000, or she'll save $2,000. When you get there, you can go get that television. So I struggled, whatever, and somehow I saved my half of the money. I said, hey, man, I'm ready. She goes, go ahead, go get that television. And I went down there, and I looked, and I had $4,000 cash, to pay for that television, and I did not do it. I go, it's very easy to swipe a card, but it's hard to depart with $4,000 cash. So I came home with a 36-inch television. I think I came home with roller skates for the kids and something else, and brought all the cash back, because it's hard to depart with that cash.
It is. It is.
But if you've got that auto deposit, you set it and you forget it. And to this day, I still don't have a debit card.
Yeah. Which is again, but you know what? For instance, Maya does she does the grocery shopping and manages your household so well,
but she wants everything on a credit card, so we can document everything and see what categories, how much on food, on gas, on miscellaneous.
Yeah. Now, and as buyers go, again, if you got a tax return coming, put that in your special savings account. Examine your budget. Try to tighten things up. This time of year is always hard, right? Everybody, we've got so many expenses in November and December with the holidays. but focus. And when you sit down with your loan officer, let's brainstorm your situation, and we can come up with solutions that work for you, and then that don't seem so insurmountable. What do you really need? First, let's identify that. Let's identify what you need and how we're going to get you there in a creative manner.
It's funny because us, along with our loan officers at Highlands, we're actually pretty good budgeters. So if you guys want to come on in, we'll look at the credit because that gives us the debts. And maybe you were thinking you wanted to put 10 or 15 or 20% down. That may be a bad move. We'll look at your budget, we'll look at your debts, and we'll say, you know what, let's not put so much down. Let's pay off some of this debt here, and let's understand where we want to get to, where you're comfortable with a payment, and work our way backwards. And then get it. And even if you don't use us as a lender, you're going to get some great advice to set some simple financial principles moving forward.
There's a lot of other things for coming up for down payment funds. Sometimes people get inheritances.
That's a great one.
Okay. Again, that has to be documented, but it can be.
Or trust.
Trust income. That's a crazy thing. I mean, there's a lot of things out there that you might not think about. And that's where we need to get to know you a little bit and go, okay, what are the options here? What are the goals, and how can we accomplish this?
We need to understand and have that discovery conversation with our clients to understand what cards are available. Don't pull any triggers. Let's just understand all the dynamics that you have going on in your life and all the available resources so we can design a mortgage and a quality of life.
Yeah, and here's, I guess, another topic to talk about regarding funds to close. What's not acceptable?
What is not acceptable, Danielle?
Cash advance from a credit card is not acceptable.
Oh, because you can't borrow money to borrow money.
No, so that's not acceptable. Also,
my neighbor is going to give me some money to buy a house.
No, that can't work either because he's not related to you.
Uh-huh.
Also, I've had people ask over the years, student loans.
Student loans.
So, when you take out a student loan, and we've talked about student loans, but the government will give you more money than you need. And over the years, I've had a couple of potential borrowers call and say, well, I'm going to have leftover student loan money. Can I use it to buy a house? The answer is no.
Because that's borrowed money.
Funds, and that's basically unsecured money. And again, we won't dive into the whole student loan conversation. We have talked about that in the past, but you cannot borrow money to borrow money.
So let me ask you, what if I went down to the bank and got a $15,000 personal loan?
Technically, no.
Okay.
Because it's not secured. Now, what you could do, let's say you owned a vehicle.
Okay.
Free and clear.
Yep.
Okay. You own a vehicle, it's worth $20,000. It's free and clear. You've got the title, and you go get a loan for $10,000. Okay. That could be used because it is secured against an asset as long as you qualify with the payment.
It's like an equity loan on my car.
Kind of, yes.
Okay,
Yeah.
and those funds are acceptable.
So those would be acceptable, but unsecured funds are not. So an unsecured installment loan would not be acceptable. Credit card loans, those things are not acceptable.
Wow. And so let's say I had a problem to qualify because I had too many credit cards. Could I go do a unsecured loan for, let's say, $15,000, pay off my credit card, so now I got one low monthly payment? Can I still move forward?
That you can, yes.
Okay.
But that's not really going to be funds to close. That's just kind of cleaning up your financials.
But that's getting me to the end zone and helping me with my monthly budget.
Yes.
Okay.
Yep.
Well, do we have any other closing words here, Danielle? You want to close up the show here today?
Well, here's the thing for buyers. Do not be discouraged in this market. If you were out looking last year and you still didn't find a house, do not hesitate to get a second opinion on your pre-approval. We've talked extensively, and we live and die by this, that a local lender with a well-qualified and experienced local realtor can help make magic happen for you.
Very quickly, actually.
Very, very quickly. And both of my daughters sold houses this year. And it was very interesting, not that I was directly involved in that process, but as a seller, when you're looking at multiple pre-approvals from different lenders all over the country, as a seller, we don't know anything about the buyer other than your name and address, what kind of loan you're getting. But a seller is going to scrutinize the lender. So as a buyer, do you understand your loan program, your down payment requirements, how your closing costs work, and how the payment work? If you do not, then you really probably need a second opinion from another experienced, trusted lender, or you're going to miss the boat this year. And what we're going to fight against this year, it's going to be a hot market. There is going to be limited inventory, just as there was last year.
And rates.
And rates are going up. And that is the thing that we cannot control.
Yeah, rates are going to limit your affordability. But when we put an offer in with our clients, we want you to understand that cash to close within a couple $100, that payment within about $10. So if we jump off that bridge and put an offer in, our clients will not crash and burn. We're going to give them a nice parachute. We have a nice soft landing. No surprises.
Correct. So start the groundwork early.
Start the journey.
You will be prepared. You will be ready to go. And usually it's a quickness thing. You want to be one of the first buyers to look at a house when it comes on the market. You can't wait 3, 4, 5 days, because then you're giving everybody else the opportunity to look at that house. Your lender needs to be working for you 7 days a week so that you've got access to make the decisions quickly and confidently. I don't care if this is your first house or if this is your 10th house. We can teach you enough to be comfortable with where you need to be, knowing that you're going to make a great financial decision.
And to help you outcompete the other borrowers that don't have a great training and a team behind them.
Yeah. I mean, how many calls do we get on the weekends?
Oh, God.
My lender's not available.
Yeah.
Okay. If you cannot, or how many calls do we get where a borrower can't really talk between 9 and 5?
Yeah.
There's a lot of people that seem to have no lunch breaks, no breaks at all where they can make a quick phone call, and they need service outside of traditional business hours. If you are working with a lender that only works 9 to 5 traditional hours, that's not going to work for you. That is not going to work for the listing agent when they call to verify your pre-approval on a Sunday afternoon. Put yourself at a competitive edge. It doesn't cost you any more money.
Absolutely. And, for those listeners, too, that maybe work midnights and stuff like that, hey, they can go to DanielleBoote.com. They can go to VictorBals.com and get the application started online. It's a very easy process with all this technology now.
Absolutely.
And we actually pick up the phones, Danielle.
We do.
Yeah.
We do. Yeah.
So let's wrap up the show. What closing words you got here for 2022?
Happy New Year, everybody. Stay healthy, stay safe, and looking forward to the beginning of the spring buying season here in Michigan and Florida. We do a lot of stuff in Florida these days.
Okay, everybody. Till next time, I am Victor Bals and my wonderful co-host,
Danielle Boote.
We'll see you next time on A Smarter Way Home.